Good afternoon, Market Chameleons and everyone joining for the first time. Thanks for coming by and watching the afternoon Market Chameleon show. We're going to introduce Ryan Mastro from OptionsRobot. But before we get started, let's take a look at the share disclaimer. Please be aware that neither Market Chameleon, Dimitri, Ryan, or myself, or OptionsRobot are registered investment advisors or a broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This webinar, as all our webinars and shows, are for informational purposes only concerning Market Chameleon tools and products. One last look at the disclaimer, and let's welcome Ryan to the stage. How you doing, Ryan?
Doing well. How about you? How was your weekend?
Great. Let me share your screen.
Okay.
Today, we're going to be looking at some options trading ideas, OptionsRobot, and how Ryan combines his knowledge of trading with his product OptionsRobot and the Market Chameleon tool set. So with that, Ryan, let's get started.
Yeah, so I think it's always wise to kind of come back and give a little context. I can turn off this grid view here real quick and just come back to what we saw since we last talked, which was, I think, last Tuesday. So we came in right after the holiday. And, that was back in here. So we've had a pretty good run, right, in terms of everything that was going on. Friday, we came into a little bit of a kind of a complex situation with jobs. BLS came out a little bit weaker. We kind of had a decent day today. We rallied up. We closed in a decent way. We're not breaking out into new all-time highs in terms of the Qs. But I think the one thing we're going to have to watch for tomorrow morning is the BLS revision report. So I think that's going to be an eye-opener for a lot of people in that, what's been talked about the past 2 weeks and a lot of the rumors. Goldman came out with a report and basically said that we'll see a revision of anywhere from I think the number was 500 to like 1.25 million. And then we had Treasury Secretary of Scott Bessent basically came out and said that we could see up to 800,000, or around 800,000. So that's a pretty big number when you go to do a revision on all of the previous things. So I think that's going to be a little bit of a gut punch to the Fed in that, kind of taking the politics of Trump and Powell been going back and forth each other. And obviously that's Trump's style, obviously not Powell's style. Powell's been just toeing the line where he thinks they should be. So that's the Fed treasurer or Fed chairman, I should say. I apologize. But when we look at the big picture, I think, we're going to see a larger cut come not this week, but next Wednesday. So I think that question comes in of what's the market going to do with that? And I don't have the Fed funds in a system compared to where we were in recessions. It's a great chart. I encourage you guys to go look at it. You can actually find me on, I think I put it up on my Twitter a couple times. But basically what that's showing is the Fed funds rate overlaid with recessions. And every time we start to drop rates, we actually start to show that numbers are going into a recessionary period. So that becomes very, very, curious as to where the market's heading, what the market's doing. So a couple things I would say in terms of kind of protecting yourself is make sure you understand where you are in terms of your portfolio. If you're a long-term investor, there are methods and types of strategies that you can use to protect those long-term investments, whether it's in a stock, you can use a collar, you can use a put, you can use a put spread, a put butterfly, anything that can give you some type of a hedge to the downside and help you protect. Using options, what we do, what Will and Dimitri and I have done for decades now is using options, right? Basically getting in and maybe doing a stock replacement. And I think that's something to kind of keep in mind too. If I'm looking at let's say I've done really well in a stock, something like doesn't matter, right? A Microsoft or a NVIDIA. I've done absolutely phenomenal in NVIDIA, and you're riding NVIDIA stock. And I like to use the example of an IRA or 401k, because I don't want to get into the tax questions. But basically, if I've been riding a NVIDIA and it's gone from 20 to almost 200, 182 or something like that near the high, what can you do with this? How do I protect that? Well, if you're holding and you want to continue to hold the stock, then you'd be doing some type of one of those strategies, a put collar, or I should say a collar outright. That's buying a put and selling a call, a put to hedge it outright. So you're going to spend some money there. You can do a put vertical where I buy a slightly out of the money and I sell something against it. A put butterfly would be a directional trade to the downside. So those are all different methodologies, but a stock replacement strategy would be saying, and I'll just give a quick example of this. If I go out to, let's go to a trade, and I'll go over to, not that one, that's a small name. Let's do NVIDIA again. And NVIDIA, and we go down to our trades, and that pop up. A little bit of a delay. Okay, why am I? A little bit of a delay there. Let's try a refresh on this. No, maybe it was loaded. I just wasn't seeing it properly. So let's go out in time. Let's just say I want to go out and I want to be able to hold something without having a lot of decay, right? So we know the near term has a lot of decay. And basically, that's also how the model works. Everything has to decay. But let's say I want to go out, maybe I go out a year, right? So we go all the way out to 26, and we go out to September. So we got 1 full year of data out there. And our at the monies, right? These are basically showing our at the money call options right now. Well, for that, did we really fall off in NVIDIA? We're trading around 170. Wow. So looking at something in the money, let's say we're looking at a roughly an 80 delta option somewhere around here, 135. I'm looking at 40, call it $50, right? Just round up to $50 on an in the money option. So $50 versus $180. So I can control the stock for the whole next year and still only risk $50 in that versus $188. That extra capital, that $130, allows me a lot of flexibility that if the stock does drop more and I want to buy it, I have something there. I could go something maybe not as far in the money that far out and say, I want to be a little bit more protective. Maybe I'm going to buy something like the 150s for $40, the 155s for $37, the 160s for $34. But I think what you want to keep in mind is you want to have something with some good delta on that, right? So in terms of stock replacement. Now, you may say, you know what, I want to be able to control it I don't need to go out a year. Maybe I only want to go into maybe 6 months. Maybe I only want to go to January. So if you look at something like a January, and again, this is not anything to do with Market Chameleon or OptionsRobot, just more in theory. I could go out and buy something in the money in January and say I'm only going to risk $20. So something along those lines, that allows you to basically have a built-in put, right? The call says I can participate in the upside, I can control that stock, but it also limits my downside. I only have $20 of risk versus $170. So I think that's very important as you look at different strategies to protect yourself. If you start to see interest rates start to go down, if you start to see the general market start to feel some pain here, there's several methodologies or at least strategies that you can deploy in terms of protecting yourself. Now, the other way I would suggest is to correlate your positions to an ETF, something like the spiders or the Qs, and then look to buy protection in those, buy a put. If you correlate all your positions and say I have 10 different positions or 15 different positions, I correlate them all to the Qs, and basically this is my downside risk, then you can basically say I can go buy 10 puts or 15 puts or whatever I need to do to basically offset my total portfolio as it goes down, right? That's something I talk about and teach on a regular basis, because that's important when you get into larger portfolios, IRAs. You're not going to get a call from your broker, right? I think that's one thing we can all agree on. It doesn't matter what the market's going to do. Your broker's only going to call you usually, I think they're mandated maybe once a quarter. So that's 4 times a year. And even then, I never get called. So they're basically just doing the cross check, make sure they send me a report. And if I click on it, that's considered their contact. So, and basically they're just looking at your risk and you're just a number in the machine for them for the most part. Now, maybe you have a family member that's helping you out, but even then they're not going to make the call to make an adjustment in your portfolio unless you have someone a little bit more aggressively. You're here because you are taking action on your own portfolio. So that's why I'm just trying to give you some insights into some of those. Now, I want to come back over to Market Chameleon. And again, my 2 favorite spots, obviously the screener and the unusual options volume. So I come back in here pretty much all day long and look at things. One name that stood out to me right at the top, we've been watching Open Door, and you can see how long that's been on the last 12 days. So that has been an option that we've been just kind of watching and riding. It's not a high price stock, But given the interest rates and what's going on, is that going to be something that starts to really percolate a little bit? So we got a little bit larger volume today in general in terms of the average. So that's always a good sign. So that means there's more options coming in. Maybe it's starting to become a little bit more of a gamma squeeze where they have these options and it allows for the where they're trying to squeeze the brokers a little bit. So open door could be on the radar. But the one that really caught my eye on is this Hood. And Hood was a big driver today of news. They got into the S&P 500. So I think that's one that you probably want to keep an eye on. If we come back over here to the charts, just to look at it on a charting perspective, HOOD, we had the highest close we've ever had, right? So that's important to understand that, we really could get a much bigger breakout, especially with them coming into the S&P. I don't remember the date when they're going in. It's usually like a week they give it. It could be sooner than that. Could be one day this week. I don't know. But typically what you see is a follow through on this where they get a couple of days. So for something like this, I'd probably choose the high of the day. I think that high of the day is 117. That doesn't seem to be right. 117.28. I think I have 117.70 so I'll have to look at that, why that's saying that. But oh, you know what? I think we use this level over here. That's what it was. I used this level. I was looking at this one over here. That's why I was in my head. 117.70. So that would be my trigger level. We get through there, bigger breakout, right? But this is the highest close, right? So this was a close. This was a close. These were all opens up in here, and they close much lower. So this is the highest close. This is showing you that they are really, really hot to trot on this one. Really could make a much bigger move. So for something like this, I'd want to keep an eye on what my ATR is. So let me just add that for you right in here real quick. So you can see ATR is about $6. So if I'm looking to trade this day trade or weekly trade, then I'd be looking at let's just do an entry bot. So I'll get into this one in terms of Hood. And I do that all the time, HOOD, there we go. And if we were to say greater than 117.7, I'm going to say 7.5 just to make sure that it's above that high and they keep pushing through. And then I'm going to add my options. Again, I'll buy the at the monies. We could go out to next week, but I'm going to use this week's. So we got a little bit of time. I'm going to buy probably the 118 slightly out of the monies. And then I'm going to look to do a price slicer. So the price slicer, which is these smart executions, allows me to kind of start at the mid, work my way up to buying the option. For the default, it's 7. Again, you can make these modifications as well. You can make these faster or slower. If I do a quick, I can use 7 times every 5 seconds. I can also reduce that if I only wanted to do 5 and 5. That gets me in within 25 seconds. So I'll create that one. So that's my entry bot. And then I want to look towards an exit. So again, there's multiple ways. I have some very complex ones where it puts stops on everything and allows me to get in and make a 20% gain my options. I'm a little bit more aggressive and I'm going to be able to watch this. So I'm going to use maybe something along the lines of this. I think I have a couple others in here. This is $2. This is $3. I'm going to use this one. I'm going to use this $3. So what this will do is allow me to roll, and I'll show this to you. Now, by me just clicking on that, I just put in a trading plan, not just one order, and I don't even have a position filled yet. So I have a hypothetical trade that's lingering out there in an entry bot, and then I have an entire trading plan that's trading against it. So what the trading plan is, if it rolls up by $3, it's automatically going to roll me up to the at the monies. If it goes up by another $3, it's going to roll me up to the at the monies. If it goes up by another $3, I'm going to get out of the trade. Now, that's slightly beyond our ATR of $6, but I think we can do that if we have another big follow through tomorrow. And if I see something where I start to see weakness, I can always get out of the trade at any point. So that is an idea. And again, what you can do if you are interested in this, I will share this one. I think this is going to be one that's going to be very interesting. So you can come over and I will share this with Will, and we'll put that into the replay so you guys can see this. And that will be one that you can watch. So anytime we make any updates to it, you'll be able to see that. If you're an OptionsRobot member, you can copy this right into your own account and just say, I like this trade and I want to copy that in my account exactly as is, and I can make my adjustments from there. So you don't have to redo anything. You can basically save you a lot of time, effort, and energy in terms of rebuilding these. So let's go back over to the Chameleon. Let's see if I can find something in our screeners, and we go by stocks. Just coming down in the volume is where I typically go to. Is there a big volume, something that's really jumping out at me? Is there something? Obviously, your big weighted names are always going to be the top here because they have some of the biggest volume. That's how it's sorted at the moment. But we also have other names that I think could be very, very interesting. Taiwan Semi usually doesn't make the cut for a big weighted name, right? In terms of it's not a big weight. It's an ADR, basically trades. But it's a big part of what's going on in terms of semiconductors right now. Our big weighted chips like your NVIDIAs and your AMDs came under fire on Friday, had a decent rally today. But I just want to show you Taiwan Semi is the one I was kind of going through this list. Obviously, Broadcom's a stud. This one had earnings. It's really overbought at the moment. So I'd be careful with that one. But your Taiwan Semi, we talked about this last week that it did have some potential. So let's just go back over here and look at the chart real quick on Taiwan Semi. So again, I'm just going through the list on Market Chameleon and then just combining what I have from an execution perspective on OptionsRobot. And I just want to kind of show this pattern because I think this is very, very interesting. We're at the top of this pattern, right? This is, I believe we are at the all-time high in the stock as well. So this one just made another higher close on that. And I would call this an expanding wedge, right? For some people, it may be something different. But what I look at here is the lows that, now even we got a little more aggressive and say I want to pick up 4 of them. So whoops, we do, you can see I got the 1, 2, 3, 4 of those that come down into this wedge. But I also have these kind of tops up in here. Let me draw the upper line. And I have this top. So this is, oh, didn't click. There we go. So you can see it's kind of this expanding wedge. Now, if we start to roll over here, right, this could get very, very negative. And I would imagine they come back all the way back down and retest. You got a gap right in here, right? This could get very, very ugly. But for the most part, if the market's going to be bullish here, and which I do think we could see some follow through on this, then I'd probably be trying to trade this through the most recent highs, right? And I think we're very close. Maybe I'm on a little bit of a slope here, but this high back here, that's 248.28. This one right here is 247 and change. This one today was 247.83. So that high back there probably going to be my catalyst if I want to get in. So that's 248.28. I would say, again, I'm going to keep it simple. If I want to get into an entry bot, Taiwan Semi TSM, and oops, TSM. And if I go greater than 248, let's just say, let's say 248.50. And again, all I want to do is add an option. So I'm going to look at this week. I don't want to go out too far. My at the money's are the 247s. I don't have 248, so I probably have to use the 247s or the 250s. So I'm going to use the at the money's 247s. Again, your personal preference may be further out in time. It may be, in the money option. That's whatever you want to do, right? You can do call spreads. You can do whatever you want in here. But if I add that option, again, I could add an option and sell this, turn this into a spread, or I could do other things like maybe a big call butterfly, a directional call butterfly. But for the most part, this is what I kind of do when I'm looking at momentum trades and try to follow along. So, this is one where I just want to play right along with it and do a quick entry on that, jump in when it starts to show me that's going to move. And let's go back real quick, look at my ATR on this one. ATR, oh, I lost it. Let's do ATR real quick. ATR, this one's not as big, still around $6, right? But that's okay. So go back to our positions, go over here to Taiwan Semi, right in there. And then if I want to add a bot, all I have to do is come back in and bot. Maybe I'm going to be a little more aggressive with this. Maybe I want to do or less aggressive. I could say I could do 3 rolls every $2. Maybe this is one in terms of the options gain. So all I have to do, there's 4 orders, 1, 2, 3, 4. And all I want to do is apply that. So now, again, I have a virtual position and I have my orders all built in. Every $2 on the option, it's going to roll my options up. So the nice thing about having $2.50 wide options, I'm going to get a little bit further away, a little further out of the money. So that's going to reduce my exposure on those. So again, those are a couple different areas. Now, just to quickly come back, you can do so much more in here in terms of digging in. The one thing I like about the Market Chameleon platform is you can start to dig into tools. One I found to be very, very helpful was the seasonality. And for the most part, you've seen that in September, we are pretty bullish. I would say 21 through 23, we were kind of bearish, right? But 24, we were okay. And here so far in 25, we've been up 7%. So you can see that in the chart of us starting to rally. So again, not a fantastic month. A couple of months have been decent, 9%, 10%. But what I think is if we're going to break out here, that we should be able to get at least one ATR, and that's about $5-6. So I think that gets me a couple of rolls in there in terms of the options. Every $2 gets me $1 in my option. So if I go up $4, I get $2 in terms of my option. That should give me at least one good roll in there in terms of a potential breakout. And I think everyone's going to have eyeballs on this thing if we do start to break out, especially as it's one of the bigger chips here. It produces something like 90% of the specific type of chip. So it's basically got a stranglehold on that market. So, Will, that's just kind of a little run through of a couple ideas that I saw that I wanted to kind of, that I found through Market Chameleon, and just wanted to show some trade management through the OptionsRobot. So just real quick, if anybody is interested in OptionsRobot, again, I'm not doing a hard pitch in any way, but if you are interested in using it, there is a free trial for 14 days. So you can come in and check that out.
Great, Ryan. We did have one question from a Chameleon user. Jim was asking about a dividend and how maybe you would look at the dividend, or maybe even see if there's any insight you can give on the dividend. The stock is OXY. He says has X dividend on Wednesday. How does Ryan trade around dividends? So
yeah, I mean, if you're in the stock, there's really no reason to trade that. I don't try to get into, oops, I keep typing C, sorry. But OXY, right? So again, I don't know, I can double check here for you in terms of, now I believe you guys have dividend information as well, right? So if I come in here to OXY, I can come into, I imagine, the fundamentals. And
actually, it's under dividend. It's under stock information.
Oh, sorry. Yeah, it's right there in front of my face. I thought it was under fundamentals. I apologize. So dividend, again, it's a decent. They did lower it here, 48 cents. So again, I guess that's the total amount so far. That's going to have to get up to around the 88. Maybe they increased a little bit here. So it's a decent sized dividend. If you're in the stock, just got to understand that the stock will typically drop by that amount. So I imagine it's only about 24 cents if it's two of them. So 24 cents per quarter, really not something I'm going to worry about. Yeah, I mean, it's just so small in the grand scheme of things. The way I look at it is the stock's going to go down for by 24 cents, right? So that's typically what happens is they take that out on the ex-dividend date. So if you're in it, you want to collect it, that's fine. Just understand the stock's going to drop by that amount. Options, again, for 24 cents, it's not going to be that big of a deal. Look, I mean, when Will and I were on the floor, there was all these guys that were doing this dividend, trying to capture trade. And I just don't think that's as prevalent as much, and it's really for ones that have a very, very large dividend. Like used to be like JP Morgan was a big one. There was a couple of dollars, right? So you get into those types of things where you try to play a dividend capture and play the options. Again, a little more of a complex strategy. Probably got to be set up as a pro to be able to do that. But for the most part, if you're in a small dividend, I don't really trade in or trade out of a position just because of the dividend. Right now, some guys will, I would say, lean into the dividend and say, I want to buy going into the dividend. But again, it's just kind of that I want to make sure I own the stock before that. You got to have settlement date, all that fun stuff that comes in. So that's usually the ex-dividend date. So you are a owner of record, I think they call it, in terms of making sure you can capture that. So, but for 24 cents, it's really not something I would lose sleep over.
Yeah, and even those, I mean, really, you mentioned it, but anything in the dividend play space, you really have to be a professional. Even professionals don't do it unless they have the access to the floor and can take advantage. Your costs will run you out of business. So it's not really about trying to capture a dividend. All right, great job as always, Ryan. Thank you so much for bringing this to the Chameleon community. Jim gives a thumbs up for your answer. Thank you so much, my friend.
Thank you. Have a great night. Take care.
And we'll see you next week. Thanks,
Sounds
Ryan.
good.
All right, everyone. For those who are joining for the first time, maybe, and you're not a Chameleon customer, you can go to the website, click on free trial in the upper right-hand corner, and get a 7-day free trial with Market Chameleon if you want. You just click on the free trial, and it shows up there. You enter your information, you get 7 days for free. So everyone, thanks for joining. Remember, Dimitri and I run our day during the trading week, and that is at 9 a.m. It's YouTube. Just type in Market Chameleon on YouTube. You'll find it, and those episodes live forever. So that if you can't catch it on the actual day, you can watch it in rerun for eternity if you want. So thanks so much again for everyone for joining, for Ryan for having this show, and for you, the Chameleon community, for joining every day. Everyone have a safe evening and a great trading day tomorrow. Bye.